Hey, what's up, guys? Alan here with EatSleepTrade.net. Going to be bringing you guys the swing trading watch list and market update for the week of October 17th, 2016. We're going to be taking a look at the S&P 500 as well as the top stocks we're going to have on our watch list for this week. And we're going to talk about a very big question right now in the markets, and that is, are we facing a larger correction? So we'll talk about that here coming up shortly. If you guys appreciate these videos, please don't forget to hit the like button down below. Also, leave me a comment. Let me know what you guys got on your watch list going into next week, as I love to hear your guys' ideas and would love to have a little discussion about those with you as well. All right, guys. Let's take a look at the S&P 500. There's a lot going on the chart right here, so we will discuss all that. I try to get rid of as much as the prior support resistance area lines as we could to try to get rid of some of the clutter here. Still looks pretty cluttered, so let's go ahead and break this down one section at a time. And the first thing we're going to talk about here is this red line here, which is going to represent a resistance line. And this resistance line represents the set of lower highs that we've been putting in, and basically an area of which we've been unable to break above. We've ran out of buyers every time we've come up and tested this area and been unable to get above that. So that in and of itself is a bearish sign and lets us know that buying strength, or the bulls, are running out as they approach this red line or this resistance area here. Another major line that we have been watching for the past few months is going to be our trend line, and that's the blue line here. And for the first time on Thursday, we had a close below that trend line. Now, of course, just because we close below that trend line does not guarantee a trend reversal, does not mean that we are crashing, really doesn't mean anything except for we had to close above the trend line, which we have not done before. So that's something to watch closely and make sure that we're paying attention to, and understanding that a trend could be changing as we failed to hold that trend line. Not guaranteed, but could be. And then on Friday, when we attempted to get back and reclaim that trend line, we were unable to, and you can kind of see how that trend line started to act as resistance, and the 20-day moving average has become resistance as well, as we failed to get back above that. You guys can see the 20-day moving average. We had that cross of the 50-day moving average, which we did talk about when that occurred, and it has now been unable to get back above that 50-day moving average. So far we have failure to break above a set of lower highs or resistance now. We have the 20-day moving average crossed below the 50-day moving average and now acting as resistance as far as Friday goes, right? We have a long-term trend line that's been intact for most of this year, for about 8 or 9 months, and we have finally got the first close below that trend line, and even some rejection on buyers trying to get back above that trend line to where that trend line is now acting as resistance. And the last area, or second to last area, we're going to talk about is this diagonal green line here, and this is going to be a pretty major support area, and this is going to represent the set of lower lows that we've created here. And if you look at the green support, red resistance, this pattern is known as a megaphone pattern, and this can cause very volatile markets, as we may get a test down to the bottom of that support channel, and it takes a nice long climb to get back up to the top of this, say it was going to be 2150 or somewhere around there, and then you get a huge volatile sell-off back down to the bottom of this support area. And then lastly, a major area is 2100 area mark, which was huge area we were watching back in here for a breakout into new highs. So that's going to be a major area as well. But with the way all of this stuff is adding up right now, it's pointing towards a larger market correction or to a sell-off. It's showing that buyers are running out and sellers are becoming more prominent. So I think we have a good shot at testing down to this 2100 support area, or the bottom of what this new resistance set of lower, or support set of lower lows will be. And I think we've got a good chance to test right down into this area. Now from that point, do we recover, reclaim trend, break out of this set of lower highs, get rejection off it, return back, break down below 2100? Of course, nobody knows that right now. We're just going to use, our technical analysis to focus on the markets and try to guide us in the best way that we can. And when you start to see failure to break above a set of lower highs, that's going to show weakness, and you're not going to be wanting to swing long breakout plays into a weak market. Otherwise, you're just going to get stuck into the fake out breakouts. So going into next week, my focus is not going to be opening a bunch of new positions, obviously not trading aggressively, but really going to be focused on managing the current positions that we have right now and just kind of waiting to see how the markets react to all of this. Are we going to test this 2100 area? If we do test this 21 to 2080 area, are we going to hold it? Are we going to see reversal off that area? Are we going to break down through it? Nobody knows right now, but these are the main areas as far as the S&P 500 goes that we are going to be watching into next week. All right, guys, so let's take a look at some of the top watches going into next week. And first one we're going to take a look at here is ALJ. And this is going to fall into the energy / oil sector. And right now, crude has made a move back above 50 bucks. I'm not a huge oil trader. I don't really follow it that much. But I did look at it on the homepage of FinViz, and it did make its move back above 50 bucks. And you could see the strength starting to come in a lot of the oil stocks, or a lot of the stocks within that sector. And I think if crude can make a move back towards 55, that a lot of these charts that are set up to break out should see some of that follow through and some of that breakout. And I think ALJ could possibly be one of those charts. It's been trading some really good relative volume. It's been holding this current trend, this short-term uptrend. The 20-day moving average is trending above the 50-day moving average, so that shows us that there's a powerful uptrend in that. And we're getting close to this little wedge pattern formation here to the edge of it, and an area where we need to kind of see a breakout occur. So we're going to be looking for a move back up towards 930, which should set us for a move towards 980. And if we can get up into this channel and hang out, that could set us up for a move back up towards 1140. So we've got pretty decent range. You had good volume and a nice hammer candle coming right off the bottom of our trend and the bottom of the 20-day moving average. Good volume again. So that could really set us up for a nice reversal on this pullback and start making for a move up towards 980. But of course, I'd like to see crude continue with a little bit of strength to kind of help confirm that these setups will continue in their way. Next, let's take a look at CC. If you guys follow me, then you're very familiar with CC. We followed it for quite some time now and been able to make some great trades on it. It was first added to our watch list way back in the beginning of February when it was trading under $4 and has just recently tested some new highs up over 16. So big range, 400% move there this year. And now it's pulled back to right around 15 and looks like it's trying to reverse. You got a little doji candle here, and it is attempting to hold that 15 area and reverse. So that's what we're going to be watching. You got a little dip under the 20-day moving average, which is nothing to be too concerned at this point. That 15 area is really going to be key. So if we hold that 15 area, that could set us up for a move back up towards the highs or up towards this next resistance area right around 1650. Next, let's take a look at CPPL, and we had this on watch, I believe, last week or the week before as well, and it falls into the same category as ALJ, the oil sector, energy sector, and with strength continuing into the oil, that's going to continue to move, the stocks within that sector, and CPPL happens to be one of the ones that is trading really high relative volume. So just had a nice breakout on this wedge pattern, and the 20-day moving average, as we mentioned on Twitter, is creeping back up towards our prices now. So that's going to give us a nice support area, a good risk reward. We have somewhere, a general idea to use as our risk if we start to get that breakout over 1640, which again could occur if the energy sector and oil continues to move higher. So this is going to still be on close watch for any type of movement in there, especially with the good volume that it's been trading. Next, let's take a look at EZPW. This is one we started a position in last week, and that was on the 11th. And we were trading this as a breakout pullback setup. So this is a perfect example of if you miss the breakout over 1050, which would have been the idea here. You could see the good volume that came with that breakout. You don't have to chase the breakout up, get caught get caught buying at the high. What you can do is wait for the breakout, wait for the pullback, buy the pullback. You're going to have much more success buying near support than you are buying near resistance. So now, so far the trade's working out for us, and it's not a big winner. It's nothing for taking profits yet. but we're still slightly up on the trade, which allows us to be patient. You never want to have to be red on a trade and have to be patient with it. You still want to be green on a trade, being patient with it and letting it work out in your favor. But 1050 is really what we're going to be watching to hold this support and hopefully reverse back up and start making a move back over 11. Let's take a look at FH. We just had another nice breakout on Friday on good volume in FH, and we were able to tweet that out and caught it as soon as that was happening. I think the stock was maybe at 319, 320 when I shouted out, hey, FH volume's coming in, it's breaking out, and made a really nice move on Friday and ended up closing right up near its highs, which is bullish. Even had some after-hour buyers, so that's always a plus as well. Still have half my position left in this, so I'm going to be looking for a continuation into next week and looking to get rid of that last half and possibly even buying some more on any dip opportunities that we might get on this. Next, let's take a look at GRAM. Another great stock. We've had some good trades in it. Haven't had the opportunity to get a move quite as parabolic as this that we've had in the past, but we have had some luck having some winning trades on it, and now we've got a nice wedge that is forming up in this top side. We started a position a couple weeks ago on October 3rd, and right now we're just kind of hanging out in this area and waiting to see if we're going to get a breakout. Back on the 11th, we said, hey, Gram's trying to break out here. It was testing up this 870, 875 resistance area, and started to put in a little bit of volume, nothing major, but was attempting to break out of that wedge. Obviously failed and did not hold, and that's a pretty good example of the type of things that'll happen in a weak market. You'll see a stock like Gram that looks like this will be a solid green bar, and it looks like, hey, we're breaking out, getting ready to break above this resistance area and should be making our next move higher, but those breakouts fail as buyers run out and the markets close weak. So don't get caught in those breakouts. However, we are still long here and just kind of watching the consolidation. If we start breaking down below 8, that's going to be our stop out area and our risk. And we're looking for that move up and through 875 and into new highs on that. Next, let's take a look at S. Sprint's been working exactly as we had anticipated on it. And now we had a nice close Friday over this $7 resistance area. So we've broken out of our consolidation here, set of lower highs, and now up over $7. So I'm going to look to see if that $7 area breakout is going to hold and we start moving up into new 52-week highs. Had some good volume on Friday, so it's looking pretty good where it sits right now. The moving averages are trending in the right direction, and we have managed to hold all of those. So we will continue to watch this in the next week and see if that $7 area is going to hold. Next, let's take a look at URBN. This one's been on watch for a while. We were watching, nice earnings gap and made a nice consolidation, pulling back here, and we were watching that set of lower highs. And we had a nice breakout play here that made a nice move on decent volume. Didn't get a trade on that, but it has since pulled back, and it's actually making a nice breakout pullback setup again. You don't have to chase the breakout, buy the pullback. And you can see we're right down next to the 20-50-day moving averages, so these should be bouncing right off each other to keep that 20-day moving average above the 50 and trending up. Nice little doji candle, which can signal the bottom of a trend or the top of a trend as well. So watch this in the next week, see if we start getting a reversal off this and start making a move back up towards 37. Next, let's take a look at WIN. We had it on watch list for a possible reversal off the bottom of this trend. And as you can see, it did come slightly below that trend. But as stated before, nothing is perfect in the market. But I kind of liked it here for a possible reversal. You start to see its first green day in 10 sessions, and that's a good sign that it could be reversing here. And the range was so tight, it gave me a great risk reward entry. So I was able to get in at, I believe, around 830 and risking down below the low of 820. So you got a really tight risk on this, and it's held up for the rest of the week last week. So now I'm just going to watch. There's a couple things to watch here. One, finding the bottom of a chart is not always the best trade, right? But buying near support is going to give you a better risk versus reward. But as we break down through support, it does start to feel more bearish, and this could very well just be a bear flag that's setting up. So one of a type of play that you've got to be committed to your stops. So if we break below 820, you get out, because this could definitely go much lower if that's the case. But obviously, if we hold this channel and start making a move back up, that's going to give us a pretty fair range that we have to the top side for a move like this. So it's still a great risk versus reward entry, even though it does, kind of looks like there could be a bear flag here and this could break down and continue lower. So something we got to keep a close eye on. But again, below 820, that's where our risk is. So we start breaking down below that, it's a clear stop out and not a whole lot of damage done for a big possible potential move back up through 10. Next, let's go and take a look at ZUMZ. We had this on watch a while back. Actually, this is when we added it to our watch list to see if it was going to hold the new trend that it was putting in after coming out of this prior downtrend. And we ended up taking it off watch list because it just wasn't really acting the way that I wanted it to. And the perfect example of a stock that ended up working out really well and could have been a very profitable trade had we just kept it on our watch list, because it never really gave us a reason to take it off. But you can see the wedge that it formed, consolidated, and then had that nice breakout over to resistance test and then gapped up. Not sure what the news was that caused the gap up there, but definitely made a nice move since it's pulled back to that 22 area and is holding that 22 area as support, which is going to be a major broken resistance area that's turning to support. So we're going to watch for 22 to hold. If 22 does hold, then that can give us a shot at making a move back up to the prior highs. Hopefully we can get a little bit more consolidation here before we get that move to offer ourselves a better risk reward entry on that. You got quite a bit of, obviously a big move above your 20-day moving average there and a lot of space that needs to be filled in. So again, if we can consolidate above 22, get our moving averages up, catching up a little bit to the chart. It's had great volume on the trade, so looking pretty good. Just want to see it hold that 22 area. All right, guys. Well, that is going to wrap it up for this week's swing trading watch list and market update video. If you guys haven't already, please do me a favor, hit that like button down below. Don't forget to subscribe so you can get notifications right when we upload new videos. And leave me a comment down below. Let me know what you guys got on your watch list going into next week so we can discuss those ideas and setups. Don't forget to check out the website, eatsleeptrade.net. Lots of free lessons on the website, as well as you can follow me on Twitter, as well as like our Facebook page, so you can stay up to date to all the stocks that we are watching and trading. All right, guys, thanks for watching. Good luck into next week, and we will see you in the next video.